Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we're going to discuss the current economic collapse and the multiple everything bubbles that are set to explode. We're going to run through a few bullet points, but before we do, please be sure to like, comment, and subscribe if you are into the economy, into finance, into economics, into the stock market, and the general macro and micro economic picture going on in America and worldwide. So, first bullet point to cover is the stock market. The stock market's near an all-time high. It's been fueled by a very low interest rate environment. Now we have a medium rate interest environment, meaning it's gone from 2-3% up to 7-8% now. And the reason I call it medium is we need about a 14 to 15% interest rate to really get the economy to where it should be to tame what? Yep, that's right. We need to tame inflation. And unfortunately, 7-8% rates that we have right now are not doing it. The Fed has obviously interest rates at 5%. And then when you factor in what the bank needs to make on top of that, that's where we come up to the 7-8% rates. After the stock market, we have Bitcoin. I know you're going to say that Bitcoin's gone down by half and it has all these great economic values and benefits and altruisms, except for the fact of the matter is, if we're going to call a bull or a coin or whatever you want to call it, it is something that's made up in air that has, yes, it has some facility to it, except it can be replicated over and over to the point that there's 20,000 other Bitcoins out there with different names. Another bubble that we're sitting on top of is student loans, which are set to be repaid this month. And that's currently at 1.8 trillion. I did another video on this. Credit card debt is at 1.3 trillion. When I did my credit card debt video about a month ago, it was 1.2 trillion. Now it's 1.3 trillion and counting. Keeps on going up. Credit card rates are at all-time highs. People deferring payments are at all-time highs. Credit card usage is at all-time high. So, default rates are almost at all-time highs. And it's going to continue to get worse and worse as the economy gets worse, as the bubble starts to come, as the air starts to come out of the bubble and people become more and more dependent on their credit cards. And then we will eventually hit all-time default rates. We have auto loans, which are at all-time highs, including monthly car payments, which are at all-time highs, especially for $1,000 and over monthly payments, which auto loans currently are 1.56 trillion. And another issue that we have are auto repo rates. As a matter of fact, last week, Google search came back with an all-time high for people Googling "give car back." So people can't afford their car payments, or they need to prioritize and they want to get out of there. They want to stop paying it. And unfortunately, you can either give it back, you can repossess it, you can sell it. But if you're underwater on your car, which is, a video that could be another video unto itself, people are paying way too much for their cars. And it's a huge amount of it is also subprime debt as well. Another bubble that we have is the national debt, which is approaching $34 trillion and counting. And we have inflation, right? If we actually counted inflation how we did in the 1980s, it would be way worse. So inflation, in my opinion, is at an all-time high. In my opinion, it's going to continue to get worse, and we'll touch on that a little more in this video. But to put it in proper perspective, a new car in 2000 was $23,000, and now 20 years later or 23 years later, it's now over $50,000, right? So it's more than doubled, which is way more than a 2% average inflation rate that the Federal Reserve was aiming for, which is a whole other scam unto itself, and that could also be another video for another day. A house, houses aren't selling anymore. The houses that do sell are through the roof because there's so little inventory, and the houses that do sell are being sold with interest rates at 8%. As a matter of fact, adjustable rate mortgages are at all-time highs because you can get a lower introductory rate and then you kind of gamble, and people believe that interest rates will go down and they could always refinance. Of course, refinancing is contingent on your job, the current economy, and how your personal finances are. And if everything goes to hell the way I believe it will, you're not going to be able to refinance because you're not going to have the economic ability. But hopefully you will, right? Um, Interest rates are too low. Yes, interest rates are now 5-6%. To get a car or a loan is like, or a house is about 7 or 8% mortgage interest rate. The problem is inflation is through the roof, and in order to tame inflation, we need higher interest rates. This way, people actually save their money instead of spend it. It defers them from maxing out their credit cards, and the list goes on and on. But the Federal Reserve that we currently have is not willing to do it. In order to get inflation down, we need to raise interest rates to 13, 14, 15%. Bankruptcies, so far for this year, bankruptcies are at an all-time high. We have about 395,000 and counting. Rents are through the roof, and unfortunately, landlords kind of have it where they get to dictate it because it's so hard to get a mortgage because mortgage rates are so high right now. But the problem is mortgage rates aren't high enough because the housing bubble is not crashing yet, which it eventually will. Food prices. So they're psychotic. And as an average American, you know what food prices are. I know what food prices are. Inflation is way worse than what they say it is. And McDonald's, and I actually saw this in New Jersey when I stopped off somewhere, they were charging $18 for a Big Mac, right? Plus tax, so, assume 8% for sales tax because it's cooked food. That makes it $20. To feed a family of four, McDonald's for one night is $80, right? The average earnings in America is $32,000. So that's almost what you're netting for the day after taxes. I mean, this is not sustainable. McDonald's used to have a dollar meal. They used to have a dollar menu, and not a dollar meal. They had a dollar menu, and you could actually get some decent stuff off of there. Now it's just absolute crap. It's overpriced, and McDonald's keeps on raising their prices. They keep on raising their fees to their franchisees, and it's not sustainable. If people started shopping, I guess, at the supermarket, they would eventually bring prices down instead of eating out so much. But unfortunately, right now, it is what it is. As I mentioned before, car prices are through the roof. More cars and trucks and SUVs are more than $100,000 now than they have ever been in history. Again, I don't know who's rolling around with $100,000 for a brand new truck or a brand new this or that, but that's psychotic. That used to be a house. I guess in some states it's a house. It's definitely a shed in some states that you can buy, but it just doesn't make sense to me anymore. A, what do you need a $100,000 truck for? And B, how does it cost $100,000, right? What in God's name is going into it? Even if you take a Lincoln Navigator with all the bells and whistles, all the computer equipment, all the screens, the massage chairs, all that, how does all that material, and let's not even get into the union and the labor strikes and all that, but how does that equate to $100,000? It doesn't. The upsell that they're making is, through the roof. Their profit margins are through the roof. We know that the big three automakers, CEOs have had tremendous increases in their pay packages. And, at some point people need to stop buying these. At some point people won't be able to buy these, and these prices are going to come down. And that's why auto loans and auto repo rates are at all-time highs. Foreclosures, so far for 2023, we're at about 115,000. That's going to get way worse. Don't forget, we also had a moratorium on foreclosures due to COVID, even though I don't know how it's 3.5 years later. And, there's still been a pause on foreclosures. And in certain states, like where I live, New York, it's a joke. Student loan payments are restarting this month. That's going to affect a ton of stuff in the economy. It's going to affect what people pay. It's going to affect what people don't pay. And at some point, people have to stop saying, or have to start saying, school is too expensive. How am I going to get a $100,000 student loan bill and find a degree that's going to afford me the salary to pay it off? Oil prices are over $100 and increasing fast. We're also on the verge of World War III. Another bubble that we have is health insurance, and medical expenses are at the highest ever on a per capita basis. And historically, the cost of health insurance on average in 2000 was $5,500. Now it's $14,300. That's close to a 200% increase over a 23-year period. That's still way more than 2% inflation. And you know what? You can't hide the cost of food. You can't hide the cost of health insurance. These are things that people actually have to pay out of pocket that's very difficult to escape. Electric vehicles and other clean energy prices are popping. There was a recent study that showed it was about $18 per mile for an electric vehicle versus $2 or $3 or $4 or $5 per gallon for gasoline. So the cost of electric vehicles is through the roof. Wind farms are stopping construction because it's just too expensive now. And the efficiency is not there that they claim to be there. Another huge bubble, unfunded state pension liabilities are $4 trillion. So the way the state works, or the pensions work for state employees, i.e. teachers, cops, firemen, they have to invest their money into the stock market. The problem is if the stock market crashes, then they can't fund it. And right now, with everything being invested, and of course the government will step in and of course bail them out, and then the problem for that is going to create more inflation. We have de-dollarization going on, which is another huge issue, which would warrant another video for another day. And tying all these things together, you have one hole popping here, you have one hole popping there, you maybe have one here, one there, but eventually one goes and the other goes, and then they all connect, and now you have a massive gaping hole, and all the air is going to come out, and it's just going to be one bad thing after another. It kind of reminds me of 2007 and 2008. Yes, I was much younger back then. My ability to process everything was way different back then, but the reality is we're way worse now than we were then, right? You can sugarcoat it all you want. The government can manipulate the numbers all they want, but at the end of the day, everything is way worse. The banks that were too big to fail back then are way bigger now. The list goes on and on and on. And my final bullet point is median income. So while everything's been doubling and tripling and going up through the roof, median income in 2000 was $32,000. It's now $36,000. So in a 23-year period, income has gone up about 10%. Barely, right? And on the flip side, a little more, 10, 15%, but everything else is doubled and tripled, 200-300%. We're not on a sustainable path. And so we're on the verge of in my opinion, economic collapse. And I don't know how we're going to get out of it. And yes, the Federal Reserve can go back to printing money. They can do quantitative easing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever number we're on. They can go back to buying government bonds. The caveat is at some point we're going to become a banana republic. We're going to become like an Argentina or some other third world country. And people are going to have a ton of dollars, but it's not going to buy them anything. So I hope you found this video helpful. If you did, please like, comment, and subscribe. If you want me to touch on anything in particular, just leave it down in the comment section below. And thank you in advance for watching, and thank you if you watched it this far. And have a great rest of the day.